Hey everyone, this is Ben from OTCAlpha.com, and today we are discussing shares and share structure. Now, this is one of the most important things we can learn and understand about the stock market today, and especially when dealing with penny stocks. Because penny stocks are primarily driven off of speculation and momentum, the amount of shares a company has available to the public determines how easy a stock moves up or down. Now, the faster a stock moves up, the more we can profit. So let's get started with shares and share structure. Understanding shares and share structure. So this is a stock certificate of Apple. Now, back in the day, you used to have to trade these over the phone and through mail, but now, thanks to modern technology, we can trade our shares of stock and buy our shares of stock and sell them online through electronic broker. But what is a share of stock exactly? A share is essentially a piece of the company. Okay, notice my pie down there. We're going to use that for an analogy today. I love pies, they're delicious. So when you purchase shares, you become part owner. Okay, so I get a piece of the pie. So the pie down there represents the company, and I purchase shares, I buy a piece of that company. Now, how much of the company you own is determined by the number of shares you have. The company has set an amount of shares available for you to purchase. So the company has a certain amount of pieces for you to buy, and you can buy as many as you want, depending on how much money you have and how comfortable you are taking the risk, okay? So a share of stock is not just a piece of paper or something you do electronically. It's actually buying a part of that company. Okay, so share ownership. So here's an example. So company A has 1,000 shares available to the public at 1 penny per share, all right? It's a penny stock, which we're focusing on anyway, so it works great. Now I go out and purchase 20 shares at 1 penny each. So what you do here is you divide your amount of shares you purchased by the amount of shares that are available to purchase to the public, okay? So divide my 20 shares I bought by the 1,000 that are available, and that's 0.02. So in other words, I now own 2% of that company. Okay? So that is what a share of stock is. Now we should get into how a share structure is for a company. This is super important to learn, especially for penny stocks right here. It's a breakdown of the amount of shares a public company has been authorized to sell and how many have been issued or sold on the market. Okay, so companies vote on how much stock to release for the public to buy, and then they go out and file with the SEC, and they are giving a certain amount of shares that represent their company that they can go in return and sell to the public. Now, there are 3 components to this structure or tiers to a company's share structure, okay? Number 1 is the authorized shares, number 2 is the outstanding shares, and number 3 is the floating shares or float. So every company has this structure. They have all 3, authorized, outstanding, and the float. Okay, let's start out with authorized shares or the AS. Authorized shares are a legal amount of shares a company can and is allowed to sell, okay? So when the company files with the SEC, these are the shares they're given that they can sell, and it doesn't mean they have sold them yet. The total AS count does not mean these shares have all been issued to the public for sale. Okay, so just reminding you once again, the AS or the authorized shares are shares that they are authorized to sell, but it doesn't necessarily mean they have sold them to the public yet, okay? Instead, these are shares approved by the SEC for sale whenever the company decides to add them to the outstanding share count. So to help us understand these 3 structures today, I'm going to have a little running storyline at the bottom of each of these slides. So it's going to follow the theme of pie, all right? And so if you look down there at the bottom, it says, say I have a pie with 10 pieces I can sell, but I haven't sold any yet. Okay, so I bake a pie, it smells delicious. I decide I want to go out to the market and sell it because I think it's an awesome pie. So I cut it into 10 pieces, and those are how many pieces I literally have to sell. But I haven't sold any yet. Okay, so that is essentially the authorized shares. Now the outstanding shares, or OS, they determine how much the company has actually issued or sold to the public. Okay, so issued and sold being the same kind of idea here. The OS is how you determine a value and ownership of the company. Okay, so the OS is important. This is what you will be basing your ownership, how many shares you have versus the percentage of the company you own, You'll be basing that off of the outstanding shares, and you can also determine the market cap or value, which we'll get into in a later video with the OS. Okay, there's a simple formula for determining how much the company is valued at, okay, with the OS. So the OS is important for those two reasons. It's also how many shares are actually in the market that have been sold. So the outstanding shares, there's two components to outstanding shares. There's the freely trading shares in the market, so the shares that are actually out there in the market, or restricted shares, okay? So you can sell restricted shares and freely trading shares, and those are both considered part of the outstanding share structure. Now, restricted shares have rules and limits on when they can be sold. So after a company sells them to someone or gives them to someone for their services, these shares could be restricted, and that means they cannot trade them for a certain amount of time. There's usually about a year time limit depending on the deal, and we'll get into that in other advanced videos. But it's important to know that there's two components to the outstanding shares, which are the freely trading shares and restricted. Okay, so continuing our pie story here down at the bottom. Now I go out and sell 5 pieces of this pie. So remember, I have 10 authorized I can sell, and I have now issued or sold 5 pieces. So those 5 pieces are the outstanding. Those are what are in the market that I have sold that I no longer have. But I tell 2 of those people that they cannot eat their pieces for 2 days. So of the 5 pieces I put into the outstanding market, I have issued. I tell 2 of those people they cannot eat their pieces of pie because I'm a meanie, okay? So they can't eat their pie. So those 2 pieces are restricted. Now they're still a part of the ones that I have sold and issued. I got money for them, but I made a deal with them that I would sell them to them only if they don't eat them for 2 days. So those are restricted pieces of pie. Okay, now the last tier to the share structure is the floating shares or float. Floating shares are how many of the outstanding shares are actually freely trading in the market. So these are when you go to place a trade with your broker, these are is going to be what you actually are dealing with as far as the market goes when you buy or sell. You're going to be buying and selling these shares in the float. Now, determining the float is easy. You just take the total outstanding shares minus the restricted shares equals the float. Okay, so if you look down there, we have 10 pieces of pie authorized. I sold or issued 5 of those pieces, but 2 of those pieces I restricted. So you take the OS, which is the 5 pieces, minus the restricted shares, which is the 2 pieces. Now I have 3 pieces free for eating, or those 3 pieces in the float, okay? So that's the difference between the outstanding shares and the float right there. So the AS is how many they can sell, the OS is how many they have sold, and the float is how many are actually in the market. Now, why go through this? Why does share structure matter? Well, it's a big, big deal because it determines how quickly a stock can move up or down. It's also a tool used to determine a company's value or market cap. Now, when dealing with penny stocks, you're not going to be looking at a company's value too much because they're mostly speculation startup company plays. And it's going to be more about momentum and the right news and the right catalysts. But it's also really a good idea to know what a company thinks they're valued at, because maybe sometimes you can find a great value in a penny stock that has more potential than maybe just a day trade. Okay? So share structure is also a roadmap for determining how easy and quickly a stock can move up. Like I said before, if a share structure is really, really big and there's a lot of shares out there, it's going to take a lot more dollar volume to move the stock. And just like that, the opposite is true. If a company has a small amount of shares out there, it might not take a very large amount of money to move the stock up big. And so when you're picking penny stocks especially, you're going to be looking at this share structure. It's going to be one of your essential tools in order to make a wise decision when you're picking a penny stock. Okay, and so the share structure also lets you know how much you own. Like I said, that formula for determining how much of a percentage of the company you own because of how many shares you have. Now, this is a big one you should listen to. It gives you warning signs of possible share increases, okay? So companies can file filings to the SEC, and they can increase their share count, which therefore dilutes, floods your share count. Okay, so if a company has 100 shares in the market and you have 10 shares of that, you would own 10%. But they can all of a sudden just do a filing, these, especially in penny stocks, and increase it to 200, and then you would only own 5%. So if you keep track of the share structure, it gives you warning signs of possible share increases. And so let's move on here. It's also a key component when deciding which penny stocks to buy. So like I said before, it's an essential tool when you're picking penny stocks. And we'll get into that in advanced videos and advanced courses, because basically one of the key elements to making a successful trade in my system that I have set up is to always looking at a share structure before you make a buy or sell. Okay, and the last one here, a must-have knowledge for penny stock traders. So yeah, basically, if you're not aware of how share structure works, you're gonna get screwed. Basically, you're gonna make bad trades, and you're not gonna know why the trade you made is successful or failing. And so it's just a good idea to have a firm grasp on share structure. Okay, so share structure terminology is, let's just go over a couple things here as far as what you're going to hear from other traders. So the AS is also the authorized shares. The OS is outstanding shares. The float means freely trading shares. Okay, and these are two terms right here you want to know. Heavy means a stock moves slow because of the share count, and light means a stock moves easy because of the small share count. And let's go over some things I teach in the advanced course, okay? The OTC Alpha Advanced course goes in depth on how to use share structure when picking profitable stocks. So like I said before, I have a system, and I don't make a trade without knowing the share structure first. So I will show you where you can find a company's share structure. There's a couple of different places. And going along with that, you will also learn the warning signs a company is going to flood the market with more shares or dilute the market, dilution. Now, if you learn how to see these signs and you're in a stock and you see a warning sign, I will teach you how to get out quickly, find this information very fast so you don't lose your money, and I will show you different sources and tools to get this information very quickly and where to find these significant filings. Okay? I will also show you what a good share structure looks like and how a bad one can crush you. And I'll show you where to find companies' share structure fast before you place a trade. So right before you place a trade, I'll show you an easy way to just look at it really quick so it doesn't kill your momentum or so you don't miss out on the trade. And then I'll also go in depth on understanding restricted shares. Okay, so I hope you learned a lot. Stay tuned for the next video, and we'll see you next time. Bye, everybody.